let's take a quick look at the pi cycle top because this has been very useful in calling previous cycle tops. I'll just expand that out a bit. And I haven't looked at this in a while, I'll move the blue line away, but this is a bars pattern from a prior cycle. The previous cycle stretched out a bit. So with this in mind, the projection here, it's following very closely, by the way. I haven't moved this at all, and these squiggles have been somewhat prophetic in the past. This would put us potentially, typically it'll reject first, as we saw over here on that green line, and then a little bit of a sideways and then break above it. So, and above the green line isn't the issue or the top. It's when the shorter line, I won't get into the details of it. It's a moving average, and this is the computed moving average. When we get above that, or when the yellow line gets above the green, that's the pi cycle top. So that puts us around February 2025 potentially. Okay, and then if we were to see that drop as I was anticipating into the summertime, those midsummer time frames tend to be kind of tricky, like 2021 and a bit in 2022. What if we come back, retest, the old cycle high or somewhere in that range, and then we blast off to that 200K region in range March 2026? I don't know, probably sooner, but this is just, we'll modify it as we go. But this is kind of what I'm thinking could play out, and we'll see. So see what happens. Just consensus is dangerous, and we don't want to sit here saying that's going to be the normal 4-year cycle. So anyway, there's certainly a lot of data indicating we could see that rapid push higher and then a deflationary bust, as a couple people are saying, but we'll keep it one step at a time. And the point of that is, even though this is retire rich, we'll be looking to take some profits at these, inflection points when things are really going rampantly higher. At least that would be my recommendation. All right.